everybody, my name's Allison and I'm the Director of Risk Tolerance here at Simpler Trading. And in today's video, I want to talk about a setup on Amazon. Now, Amazon has, of course, been overall weak this year, like many other symbols. Unlike the market, though, recently, where SPX was able to try and get back above its 100-period simple until recently failing it within the last week, Amazon was nowhere close to its 100, right? Its 100-period simple was way up here. And so it's really struggled to get back to the upside. $100, which used to be a price support level for the last several years for Amazon, has turned back into price resistance. You can see that we've struggled to break back above that level recently. And then, of course, we're in an overall bearish trend. We're starting to get a bearish signal on the compound breakout tool, and we have a potential daily squeeze, which at this point, if I were having to bet which way it's going to fire, I'd be looking at to the downside. On top of that, for the weekly time frame, last week, we actually printed a bearish divergent bar, which can help be a clue that we might follow through with a lower low within the next 3 bars. And technically, we've already done that, right? So the lower low last week was 86.73. As you can see, as of right now, at the time I'm recording this video on Monday morning, we're around 86.39. So that's already followed through. But of course, we have plenty of room on momentum. This is an overall bearish trend. Last week, we went up, tested the 10, and we failed there. And so it's not uncommon that sometimes, right, it barely follows through with a lower low and then it kind of chops. But other times we get this bearish divergent bar, it can create a very nice lower low. And sometimes it's the spark for a trend move to the downside. So when we know that we have room on momentum, that the overall trend is bearish, that last week we recently tested resistance in it, continued to hold. And then, of course, we pair it with the potential of a daily squeeze, right? That to me shows that there could be a little bit more strength to play this for a rollover to the downside. And even the intraday charts right now are looking relatively weak. As we can see here, just for example, hourly chart recently went up towards the 100. That failed. Still room here on momentum, still a bearish signal. And so there's quite a bit of weakness on this that looks good to potentially continue to play lower, especially if the market's going to roll over. And so for the Profit Recycling Mastery, we already jumped into a trade idea on Friday based off the bearish divergent bar, but I certainly still like this to the downside. So what I ended up taking is I went out 3 weeks because of the bearish divergent bar signal, right? You want to give yourself 3 bars for it to work out. And I went out of the money with the 83 put because I really wanted to keep my risk low, but at a level that I thought certainly was viable if we start to see this squeeze fire and roll to the downside within a 3-week time period, right? So I certainly think we could see 83 even by this week, let alone out 3 weeks. So I certainly like that strike. I obviously, with Amazon continuing to move lower today, I am a little bit profitable on this, but I certainly still like the cost basis and the risk here. If you're wanting to play this a little bit differently, there's a few ways to go about it. You could, of course, give yourself a bit more time and jump into a long put. You could also keep your risk low by doing a vertical spread. So here you give yourself more time than what I have, right? You go out 30 days. And you can do a 5-point spread. It's around the same capital cost as my long 83 put currently, but you give yourself more time to play the signal. The short strike can help offset some of that theta decay on the long strike if we chop for a little bit before really rolling over. The downside, of course, to a vertical is it does limit your profit potential. So if I filled here at 167, my max profit potential is 333. But certainly a great risk versus reward, even if you do limit that profit potential some on a potential roll to the downside. And I know I'm not the only one at Simpler looking at this for a move lower. I actually got a message from Cody mentioning that he opened this a bearish trade in the options room, I think a little bit earlier that day. So maybe some of you guys who are Simpler options members are already in a play to the downside. And he did share this image with me. So for those of you who are curious about dark pools, right? For those of you who don't know, dark pools are basically the big hedge funds, right? The people with the big pockets that really manipulate the market. Cody here at Simpler Trading does a great job of kind of tracking those numbers. He can trade off of them so that way he's kind of like in line with the big players. And it's a great tool to have, certainly one I'm personally looking to learn a bit more from. But I'll go to Cody and I'll ask him. So when he mentioned that he was in Amazon too, I asked, like, hey, did you see some dark pool numbers around this? Because certainly my technicals all look great to the downside. And he mentioned part of it was his technicals, but he has seen some big prints follow through. And this was the snapshot that he sent me. So you can see here, a lot of these are puts that are being open. A lot of them are for January expiration. You did have some for December expiration here, but a lot for January. And you can see it's not just small numbers. So I know he likes to mention anything above 10 million is a bigger print. And you can see this was a 12 million print. There was 12 million there. There was another 12 on this one. So you can see some big players starting to come in looking like they're attempting to short this to the downside, at least as of right now. So, when we have that analysis, when we pair it with the technicals, I like the possibility that this could roll over. Of course, as always, guys, keep your capital risk within your risk tolerance, right? You don't want to load the boat here because you think the big boys are, and then they manipulate it in some way and cause us to lose money, right? So always be within your risk tolerance. But I think there are several great ways to potentially trade this for a small risk and allow yourself a nice profit potential if we do in fact get that move to the downside and get this something like the daily squeeze to start firing lower. So that is my time today, guys. Thank you so much for joining me in this video. As always, I hope you guys have a great rest of your trading day, and may the trade be with you, my fellow Jedis, and I look forward to talking to you next time. Bye. Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.